focus on the next company. We have Finolex Industries. That's the one on our radar. In Q1, the company witnessed weak volumes, but the PVC resin witnessed strong revenue growth. Also, the Finance Ministry over the weekend has imposed definitive anti-dumping duty on CPVC imports from China as well as South Korea. What's the outlook from here on? Well, we're joined by Mr. Venkataraman, the MD of Finolex Industries. Hi, Mr. Venkataraman. Good morning, and thanks a lot for joining us here on CNBC-TV18. Let's get this recent ADD news first out of the way on CPVC resin. As a percentage of your total mix, how much is CPVC pipes as a percentage? I believe it's low single digits. Could you clarify?
Yeah, it's about 8 to 10%.
8 to 10% of your mix. Now, on this part of your business, the input cost could potentially go up. How do you see this panning out? Will it be totally passed through? Because I don't think you're backward integrated on CPVC, or you could clarify on that front. And will it impact your business?
So most of our CPVC purchases are from India itself, so unlikely to be impacted.
Okay, so no impact on the CPVC part of the business. Got that. Mr. Venkataraman, let's focus on the other part of your business. You have given us a guidance in terms of volumes, I think, of around 12 to 15%. You could clarify on that point, which side is it drifting towards, the higher or the lower end? But that's more or less in line with what the industry is expected to grow. How do you see your market share panning out? Because there are competitors who are guiding for higher numbers. Clarify on the same.
So our guidance still goes from about 10 to 15%. The last quarter or the current quarter, Q2, which is typically on the lukewarm side because of the rains which we have received, but it's expected to pick up in Q3 and Q4.
But what about your market share, sir? If the entire industry is going to grow in this range itself, will you lose some market share?
So it should be a steady market share gain, because we are also having gains in terms of our non-agri segment has been growing quite significantly above the market numbers. So we expect that segment to be growing faster than our agri segment.
You have a rough number about what is your market share currently in the agri and the non-agri space?
It's very difficult to say that, because there is no central agency which collects that information. Therefore, it is very difficult to say quote the market share numbers at the moment.
But you have a rough number, sir?
No, it's difficult to say. As I mentioned, it's difficult to say because there's nobody collecting the information centrally.
Okay. Mr. Venkataraman, I just want to go back to the differential between CPVC and PVC, because one of the notes that we were going through, analyst notes, points out that now, because of this anti-dumping duty, perhaps the input for the raw material CPVC, the minor increase in maybe pricing. But on the other hand, PVC prices have been coming down apparently. So perhaps there's going to be a larger differential between PVC pipes and CPVC pipes. Now that's an analyst theory. Tell us if that's what you're seeing on ground. And just give us the mix for you and the pipes business. How much is still PVC? How much is CPVC? And what are the different trends? Just tell us the volume expectation and what the mix is going to be between these two segments.
So CPVC pipes are essentially used for hot and cold water, and SPVC pipes have got a much wider application. And therefore, in our product mix, as I mentioned, CPVC is about 8 to 10%. And yes, people importing from China and Korea are likely to see an increase in price. We procure most of our CPVC locally, and therefore will not be much impacted by this ADD which has come in. In terms of growth, both segments, CPVC is mainly falls under the non-agri segment, and CPVC segment typically grows at the plumbing and sanitation, the rate at which the plumbing and sanitation segments grow. And overall, if you see, agri typically grows anywhere between 5 and 9%, and the non-agri segment has been growing about 15% in line with the building and construction segment.
But sir, what about the pricing on the PVC side? Is it true that pricing there has been coming down substantially? And therefore, what's the projection on that part of the business?
So we have seen volatility in the PVC pricing. The prices did go up all the way up to $920 per metric ton. It has come down to about $820 per metric ton. If you look at the overall last 10-year average, the pricing is anywhere between $750 and $800 per metric ton. So it is inching more closer to the steady state in the last 10 years. And this is something which, as an industry, everybody likes a more stable price so that it is not, the overall demand is not hampered by the price movement.
And is the fall in pricing for PVC, is that a pass-through? Or do you retain any amount of benefit?
So
in terms of margin
in this market, piping and plumbing and sanitation segment, or in the pipes and fitting segment, is fairly efficient. The moment the price increases or price decreases, it is passed on to the market within a couple of days.
Okay, all right. Mr. Venkataraman, let's focus a little bit on business in both your two segments, that's in pipes as well as in resins. What is the EBIT per kg and how do you see in both these two segments it panning out?
So if you look at Q1, our price per EBIT per kg was approximately 14.85 rupees per kg. This has seen an upward movement for us, especially due to the product mix change. We have been focusing much more on the plumbing and sanitation segment, which has got higher margin. When you look at the resin segment, if you look at the last 10-year average, it is approximately about 13 to 15 rupees per kg. And that is something which is a steady state, but it does see a lot of volatility based on the PVC prices.
And you said the EBIT per kg in the pipes business was 14.8, but that has moved up. Moved up to how much, and where do you see this?
If you look at it, say about 5 years back, it was in the 7 to 8 rupees per kg. And right now it has moved all the way up to about 14 to 15 rupees per kg.
And as the mix changes, do you think it can further move up from here?
No, it is about 15 to 16 is what we expect. And that is the range we are looking at in the next 1 to 2 years.
All right, you've given us a fair idea about the operational performance, but before, should we ask you some more questions on that front? I wanted to ask you about this buzz in the market. You would be speaking to the promoter entity quite a few times, and I think you know what I'm going to ask you. Is there any kind of resolution at the promoter level with Finolex Industries, Finolex Cables, some resolution on the cross-holding, something that the street should expect?
See, the management team is fairly insulated from what is going on with the family, and therefore it doesn't have any impact on the day-to-day operations, and we don't get involved in the family matters.
That's right. It doesn't have any impact on the operations, sir, but some kind of resolution will be something that will be music to the ears of your investors. So they would like to know if it's heading in that direction. A resolution at the promoter level will be good news. Even sorting out this cross-holding will be very, very good news.
So as I mentioned, as management team, we don't get involved with the family business.
All right. Mr. Venkataraman, just one last question. What is capacity utilization at? Is it still around in the 60 zone, or has it moved up?
60 is in the 60 to 70%, depending upon the time of the year.
Okay.
Yeah.
All right.
Okay, so finally, as we wind up the conversation, now I'm talking about the big numbers at the blended full year company level. Can you give us a sense of the top line growth that you see ahead for FY25 and this stupendous margin expansion that we saw in the first quarter, whether that's sustainable, and what are you targeting in terms of full year margins?
See, in terms of top line, it is going to be very difficult to predict. It is completely going to be dependent upon about the PVC prices, and therefore it will be a difficult one to predict. In terms of margins, we expect anywhere between 12 and 15, which is we had a good first quarter. Second quarter has been lukewarm, and we expect that the third and fourth quarter it should be picking up. And at this point of time, we are looking at a volume growth of approximately 10% to 15%.
Okay. All right. You've maintained that for a while. Mr. Venkataraman, thank you very much. Good speaking with you. Appreciate you joining in with some of that perspective. That's Finolex with an outlook as far as the industry is concerned. Stock's absolutely flat.